Yeah, yeah. Yes, 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 yes. What is going on, family? Give me 1 second, family. Yes, 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 yes. What's going on, family? What's going on, guys? Welcome, welcome, welcome to today's session with your boy Abel. Once again, we are back with another fire session, guys, and I'm excited to be here with every single one of you guys as usual, because now it's time for us to go ahead and get better. Right now it's time for us to go ahead and get better. Right now is the time that we forget whatever happened throughout this today. Right, no matter what your results were, guys, trading today. Right now it's just time to go ahead and learn from not just those results, but continue to just improve with trading as a whole. All right, so that's exactly what we're gonna go ahead and do, that, guys. But go ahead and drop your locations in the chizzy chat. Right, let me know where y'all tuning in from, family, because we are live right now. And I really love to see how diverse we are in the chats, right? So go ahead and drop those locations. If you also have not done so just yet, do me one favor, right? I only ask for one thing from you guys, right? Actually, I ask for two things from you guys. The first thing is to make sure to engage in the chat, right? Make sure to actually ask the questions that you have at the top of your head, because I'm one of these educators, guys, that I actually enjoy answering the questions. Okay, so I try my best to entertain every single comment, question, or concern that is thrown in the chat. So definitely take advantage of that for sure. Okay. But besides that, the second thing that I need from you guys, the second favor, go ahead and smash that like button, family. Go ahead and smash that like button. Let YouTube know that this session is off the chain. Right, smash that like button so YouTube knows that they need to spend this message out to so much more people. All right, so those are the only two solids that I need from you guys, only two favors, and I appreciate y'all. I love you guys so much for doing that, and that's exactly why I'm on the stream with you guys today. Right, to make sure that we are just continuing to get better, and make sure that I do provide you guys with massive value tonight. Right, but let's see what we got in the building today. We got the Chicago squad in the house. My guy Christian and the team, I appreciate y'all. Love y'all guys over there. Right, I can't wait to make my way out to Chicago and do a nice training, do an event with y'all out there and just really turn up. Right, but I appreciate y'all. We got George, right, super supporter for 2 months. Let's go, Georgia. I appreciate you. All right, let's say I've been looking for a smart money trader that goes live, and I finally come across when you. God bless. I mean, I appreciate the compliment. I definitely take that, but I don't even consider myself a smart money trader. Right, I consider myself more of a, if we're talking about like a main type of bias trader, like I'm more of like a sentiment trader. Like you could call me more like a fundamental trader nowadays, right? Obviously when I first started trading, it was definitely technical dominant, where I was learning different strategies, and I got real familiar with smart money and stuff like that. But smart money is not what's ultimately telling me what I should be doing, right? It's telling me where I should be entering. Right, that's what smart money does, right? Smart money concepts from the technical perspective definitely tells you where you should be entering the markets, but it's really not telling me the overall direction, overall order flow, right? And that's why I'm very big on fundamental and sentimental analysis, because that's what it does for me, right? But I do appreciate the compliment. I'll take that, right? But let's see what else we got here, right? We got Baltimore in the house. Tony. What's going on, Tony? Good to see you in the chat, right? Shout out to our Baltimore Ravens. I know that we had a pretty disappointing defeat this past weekend, but it's all cool, man. I know for a fact we're about to win the remainder of the schedule, right? So I feel bad for any of you guys that are on the Baltimore Ravens schedule this year. It's not looking good for y'all boys, right? I promise y'all it's not, right? Big shout out to Tony, man, and any of my Baltimore Ravens fans in the building. Right, I'm a diehard Baltimore Ravens fan, so you know the vibes, right? But I see we got ATL in the building as well. We got DC, what's up? right? Thank you for your live earlier. It helped me. I appreciate that, native God. Hopefully, I can provide you with more value tonight. All right, we got Ronnie in the building. What's going on, Ronnie? Good to see you. New Jersey in the house. Arizona, Alabama. What is up? TJ's in the building. What's going on, TJ? We got Nigeria in the building, right? Maurice, I see you, right? We got Houston, Jamaica in the house. What is going on, family? Zimbabwe, Singapore, Cincinnati, South Florida, Raleigh in the house, Nigeria. What is going on? Let's see. What's good, family? My first live session. Let's go. Let's go. I love to see it. I love to see it. Hopefully, I can give you some value tonight. All right, so we got Cincinnati in the building, joining on my cab ride home from New York City. Let's go, Margarita. Great to see you on tonight. We got Rhonda in the building, Queensland, Australia, Nigeria in the house. If we don't quit, we don't lose. I completely agree with you. All right, I completely agree with you. All right, I see we got, let's see, got to keep the faith right 1,000%. Right, again, you have to really understand, guys, right? Like, the reason why, for me, I'm a very positive person, right? Like, that's one thing that I think annoys the hell out of my wife, how positive I am, no matter the situation, right? Because I truly believe that energy is everything, right? Like, I truly believe that your energy and your vibrations is literally going to dictate the type of results that you're going to see no matter what it is that you're doing, right? Now, I'm not going to get too deep with you guys tonight because I could really, really get deep in terms of a lot of different mindset topics, a lot of, things like that, but we're going to keep it short and sweet today to start off today's sessions, guys, right? So, again, your vibration, right? All of us right now, we are all vibrating at a different level, right? That's just the reality. Some of us could be at similar levels, right? But for the most part, we all vibrate at different levels. Sometimes, we have people, matter of fact, not sometimes, but majority of time, right? Majority of the time, most people out there are vibrating at low levels, low negative levels, and are so confused as to why they continue to attract low results into their life, right? So the big reason why I'm always such a positive and bubbly person, right? And I love just being, just showing love and showing gratitude and showing abundance is because what do I want in my life, right? What do I want to attract, right? What do I want to see, right? So your energy is really playing a big role in this as well, family, right? So if you are approaching these markets, if you are coming to these markets, guys, with a negative energy, right, with an upset energy, right, with a scarcity mindset, I promise you it's not going to help you out in this game. I guarantee you it's only going to make it that much harder for you, right? So again, let's make sure that we are positive, right? It does definitely just plays a major, major role for sure, right? So, that's just my little spiel on a little bit of mindset and energy overall, right? Now, for those of you guys that know me, you guys know that I normally be going on rants when I be talking about certain topics. But for today, I'm going to leave the rants for maybe, who knows, maybe a little later, right? But for right now, let me go ahead and go through this chat. And we're going to get straight into the markets, guys, to see what exactly what we have to worry about, because we do have major news dropping tomorrow that is going to be a very big deal. We all have to be aware of it. We have to understand how to not just be aware of it, but how to position ourselves in a way to take advantage of, tier 1 data that's getting released tomorrow. Right, so that's definitely something we're obviously going to go ahead and get into in a few. But like I said, let me go ahead and just continue giving these shout-outs because I want to show massive love to every single one of y'all that's here with me tonight. All right, let's see. Can you help me with my doubt? Tomorrow, FOMC release, we are expected to go up 75 basis points. If we actually come out as forecast, doesn't that cause the Dixie to go down and everything to push up? It could, right? There's definitely a possibility for that, Christian, 100%, right? There is always a possibility, right? There's a possibility for anything, right? Like even the thing that you assume won't happen, there's always a possibility for that to happen. We're talking about, a market that is reacting, so aggressively to data and news, especially right now, with the state of the markets right now. It is very possible, right? But for me personally, what I think, right, the Federal Reserve has pretty much made it very clear as to what their stance is. Okay, so even if we do come out as predicted, and even if we do experience a short-term pullback, all right, that's exactly what that's going to be, a short-term pullback, all right? Because, again, even if we do come out as predicted, that's still a massive jump up in interest rates, right? We're talking about a 75 basis point rate hike, right? That is massive, okay? And that's only going to continue to cause the dollar to actually go ahead and have more demand, right? Because now it's just continuing to price people out of these markets, right? Again, the whole point of interest rates is for what? Why do the Federal Reserve utilize interest rates as a tool. Why do they utilize it as a tool for? Right, to control monetary policy. Right, if they're able to control monetary policy, then they're able to control inflation, or at least that's the whole objective of it, right? So that's pretty much where it comes out to, right? Again, if inflation was far lower, then yeah, we could have possibly seen some pullbacks. But since inflation is still through the roof, since the Federal Reserve is just straight up set up, they're completely, their mind is completely made, that they're going to continue raising rates throughout the entire rest of this year. We just need to continue sticking with the bias that we've been in literally this entire year, right? We have literally been on point. We have been extremely accurate since I started going live with you guys here 4 or 5 months ago. And it's all because, again, we haven't shied away from that bias, just because we understand what the overall landscape of these markets are right now, right? And I feel like that's what's giving us such a very big advantage, because now we know exactly what the hell to do, right? But that's just a little bit in my take in that, right? It could go down, but even if it does go down, it's going to be short-lived, right? So I see we got Houston in the building. What's going on? Let's see. It's crazy because you look like Tank Davis. Shoot, I'll take that as a compliment, I guess. As long as me looking like Tank Davis gives me his fighting abilities, I'm with that. All right, let's see. Kenya in the building. What's going on, Kenya? Shout out to you guys. Right, I see we got Brooklyn in the house. Little bro Danny, what's good, dog? I see you. We got Chicago, right? Sacktown in the house. Rwanda, South Carolina. What's good, Winston? We got Savage Land in the building, right? Stockton, California. What's up? How are you doing, Lachelle? Las Vegas, UK, LA. All right, let's see. Shout out to that boy Julian in the building. H-Town, stand up. I appreciate you, bro. Let's see. During Powell's speech, why does gold goes for a buy? Why does gold go for a buy during Powell's speech? Are you talking about every time Powell speaks? Is that what happens? Is that the what you've back tested? Right? Because I mean, it could. I really don't know. Right? I really don't know. There could be various different reasons why gold could benefit, right? One thing that I do notice, though, is that normally, and this is something that I noticed, right, is that normally whenever Jerome Powell is about to speak, right, you definitely see drastic setting up in the markets for a lot of these indices, right? So there's some correlations to the indices when Jerome speaks. I haven't really done any research on gold, right? So you might have to educate me on that. High on faith. Right, but let's see. Gold looks promising today, right? Out there in Kenya. What's going on, Rose? Shout out to you. Right, we'll definitely take a look at gold for sure today. Let's see, is the bonuses from Outer Circle Telegram still valid if we get the 5-day, right? So it is still valid, guys. That offer, right, is going to be up literally this entire week, right? So it's literally only going to last till this week on Saturday, right? That offer will no longer be available. The boot camp will still be available, right? But you're not going to get all the bonuses. You're not going to get the 10% off, right? So definitely take advantage of it, guys, for this week, just to go ahead and take advantage of everything that's coming with it. Let's see, we got G, my brother George. What's going on, George? Good to see you in the chat. What's up? Let's see, I meant because Tank Davis is from Baltimore, home of the Ravens. Yeah, big shout out to Tank. Yeah, he definitely is from Baltimore too, right? But I'll still take his fighting abilities. Don't try to take that away from me now, Native. Come on now, you already gave it to me. I'm keeping it, right? Let's see. So we are possibly bullish for the FOMC interest rate Fed decision, right? We're definitely gonna get into that, right? We're gonna talk into that, guys, because obviously from a macro perspective, we're still 100% still bullish. Right, from a macro perspective, yeah, we're still bullish. The dollar. We're still bearish the indices. Right. We're still very much, in an hawkish environment, no matter what. So yeah, we gotta continue to stay with that risk off type of sentiment. So from a macro perspective, 100%. Right. Now, from a micro perspective, that's when the technicals really does come into play. Right, because from the macro perspective, from an intraday perspective, the technicals is what's really giving us those clues as to what we could see, occur from the short term. Okay, but we're gonna get into that as well, guys, when we actually look at the markets, because I am gonna compare, obviously, what the dollar can do and show you guys the different possibilities based off what could happen in these markets for interest rates. All right, let's see. Let's go, Abel Davis. I'm telling you. All right, a lot of these Forex YouTubers, they don't want to do no boxing match, man. Imagine that, right? A boxing match with all your, favorite Forex YouTubers. They don't want these problems. Abel Davis. Let's see. I'm anticipating a short-term bearish dollar, maybe 2-3 weeks. Bearishness, what do you think, Coach? I mean, it's possible, right? And again, I'm going to show you guys some different opportunities, different outlooks as to what I think can actually happen for sure. All right, let's see. Can you read my question? Where is your question, Eric? Let me see if I can find your question. All right, because I definitely want to make sure I get that answered. All right, so let's see. I can't find it, Eric. Copy and paste it. All right, copy and paste your question again. Let's see. When would you get to the charts? Would you mind going over stop loss when trailing a trade? Where do you put your stop loss? Right, that's a great question, Vincent. We'll definitely go ahead and get into that. And just please make sure to remind me in case I, forget for whatever reason. But definitely keep that in mind for me. All right, and I got you for sure. 'Cause that's a good question. Very good question. All right, so let's go ahead and get into this now, guys. So again, the major data that we have to be aware of going into tomorrow is definitely going to be FOMC, federal funds rate, right? Federal interest rate decision. And then probably most important, and this is probably what a lot of y'all is really not paying attention to, right? And really don't care for, but the press conference, right? If you really want to know, right, from a short-term perspective, if the dollar's actually going to gain strength or if it's going to lose strength, that's going to be found inside of the press conference, okay? Because now that press conference, guys, which is going to be 30 minutes after, right, the actual interest rate decision, right, this is when Jerome Powell is literally going to pretty much give us an insight and give us clues as to what their overall goal is going to be moving forward. Right now, obviously, the whole expectation is them comparing, interest rates and CPI and inflation and all that stuff. But that's where we're really going to be able to get the most nuggets. Right. So again, I get it. A lot of us are going to be, excited to see what this comes out as. But the press conference is really where the sauce is going to be at. Right. The press conference is really where the sauce is going to be at. That's going to give us the sentiment that we can utilize to really figure out. Okay. So definitely just keep that in mind, guys. Overall, we do have that coming out tomorrow, right, which is going to be a very big deal. Right now, again, they are expected to raise rates 75 basis points. I don't think it's going to happen, but I do just want to throw this out there. There is a small possibility of 100 basis points just because of the most recent CPI data really wasn't that promising, right? So there is that possibility, right? I don't think it's going to happen. I think they're going to stay on the course of 75 and then wait for the next CPI data to see if they want to go even more aggressive or not. But for the most part, guys, they are actually going to raise rates, right? That's guaranteed. Now, the question that us as traders have to figure out, right, and have to try to identify is obviously how priced in could this have been, right? Because we know data like this, right, like an interest rate decision, where we already know that is a very high likelihood of this actually coming out as forecasted, more times than not, it's already being priced into the market, right? Smart money has already got into positions to take advantage of the fact that interest rates are going to go higher, right? Now, for all my family that's on the call, right, what does interest rates go higher tell us for the dollar itself, right? If interest rates, and again, think about it from a bigger picture. If interest rates are going to continue to go higher, then from a bigger perspective, what should we expect the dollar to do? All right, answer that in the chat. Let's see. I have a question. Don't you find it a little bit suspicious how the whole world's suffering from the same problem at the same time? I've been doing research. A lot of small countries going bankrupt. Insane. Yeah, no, it really is crazy, Eric. Right? Like it is. And this is the thing that I think what a lot of people are really not understanding. And this is also what I believe the Fed is also not understanding. Right now, again, who am I, right, to say that the Fed is wrong, right? Who am I to go against the Fed, right? But I truly do believe that they are completely underestimating what's really going on here, right? Because, it really started with COVID. Because COVID really did a crazy number on us, right? So going through that whole situation with COVID, right, and then obviously in 2018, 2019, then we seen the Federal Reserve flip-flop from raising rates to then lowering rates, and then we started experiencing just supply chain issues, right? It was just a lot, right? It's a combination of so many different factors, guys, that is causing these economies to be the way that they are. But I still believe, and again, I hope I'm wrong, but I still think the worst part is nowhere even near yet, right? Like in terms of pain, I still truly believe we have a lot more pain to come, right? In terms of, pain in the stock market, indice market, things like that, right? Which overall is going to lead to pain to the everyday individual, right? So that's just my guess. I hope I'm wrong. But just the way that it's looking, like, who knows if we're going to get inflation down, right? Like, who knows if inflation is ever going to, I mean, it's going to get back down, right? Because they're going to force it. But who knows how long inflation is going to be high, right? People couldn't afford everyday bills when inflation was at that 1%, 2% level, right? So now we're talking about, you know, the price of goods costing 8%, 9% year over year, right? The real actual inflationary number that they don't talk to you about, that you will never probably really hear mainstream media talk about, is probably closer to 12, 13, 14% inflation, the real number, right? So again, it's a combination of that. It's a combination of the real estate market now turning around. It's a combination of, like, all these financial markets, guys, are now really starting to, take a hit, right? Because of the policies that, these central banks are implementing. Okay, so again, we are at a very interesting point in time that we definitely have to be aware of, because I truly believe that although there's a lot of economic hardship on the way, in my opinion, I could be wrong, right? Disclaimer, right? I got to just throw it out there, right? But in my opinion, I do believe there's going to be a lot of economic hardship that's about to come in. So the best thing for us to do is just be aware of it, be educated on it, and learn a skill that can still make money through it, right? That's the best thing that us as Forex traders have, right? We have the ability to make money even through economic hardship. In fact, I truly believe, and again, this is just me, guys, right? I have 7 years of experience, right? But I truly believe that right now is by far the easiest time to trade. Like, these is the easiest markets to predict, right? And they have been the easiest. I mean, these are the most predictable markets I've ever seen in my life. I mean, at least since I started trading, right? It's because we know that there's economic hardships, right? We know that we're seeing GDP, contracting. We know that we're seeing inflation through the roof, right? We know all these things. So the markets are extremely easy when you know all these things, right? So right now, again, even though we are going to experience a lot of economic hardship, that just makes these markets that much easier to actually trade, because now it's that much predictable, right? Does that make sense, family? Drop some threes in the chat if that makes some sense, right? Because again, this is easy. Like, we've been calling this buy all day long for months, for a year now, I believe, right? I've been calling this, guys, literally for over, literally since the beginning of this year at the very least, but I've been calling dollar strength since last year. And it's, again, all because I'm using the data, right? I'm using the information. That's all. All right, but let's see what we got here, man. Big shout out to Joe, right? Super supporter for 4 months. Let's go, brother Joe. I appreciate you, man. I love that silver emblem near your name. It looks sexy, man. I appreciate you, my brother. And you dropped a 20 bomb on me as well. Man. What are we doing, man? You are a beast, brother Joseph. I appreciate you. Anything that you need from me, right, on this stream, please let me know. Any pairs, any comments, any questions, you get priority just because you did help out and you sponsored the channel, and I appreciate you. All right, but let's go ahead and see what else we got here, guys. We'll go ahead and catch up with these comments, and then we'll go ahead and really break down what I think is going to happen here for the dollar and what we can expect moving forward, right? And just so you guys can take a look at, right, these vertical lines that you guys see right here, it's just pretty much indicating, guys, the last time we actually did raise rates, right? It's pretty much every single rate hike that we've experienced this year. And the reason why I marked it off is because I actually did this with the boot camp during the study session. Right, shout out to all my boot camp alumni. I appreciate y'all. I love y'all. Right, which we actually host a study session, guys, every single weekend. Right, every Saturday, we're hosting a study session, and we spoke about this on the study session. We actually did some very interesting, back testing on various different things. Right, but this was one of them where we were just comparing, how the dollar has reacted, right, on the actual day that the market, or that they actually, interest rates actually went up. Right, so that's what we did, and we were just looking for any type of similarities, any type of things that stand out, right? And so that's what the vertical lines are, right? But that's something that we really just broke down in the boot camp, and we're gonna keep that. That's some boot camp value right there, right? So we're gonna keep that for the boot camp students. But overall, guys, so what do I think can happen next, though? Right, so I'm very interested in a few levels here, guys, for the dollar itself, right? Because again, I believe we're still going to end up being bullish off of this decision. Even if the market already priced in 75, right? Even if it does come out as predicted, I'm still going to be looking for a long-term bullish play. Now, the question that we have here is, where do we actually decide to jump into positions from? Okay. Now, what I want to do is, for one, step number one is always to identify the trend. We already know that, right? But the second thing that I like to do is, now I like to identify, okay, if I'm looking for an entry, what is our trading range? Well, from a daily time frame, our trading range is going to be this swing low to this swing high. This is our trading range right now. All right, this is our current trading range, right? Everything inside of here is literally what we're going to be paying attention to. And overall, since we are in a bullish trend, we want to look for the buy. And as long as we do not break the lows, we are very much bullish no matter what happens in here. Like, I'm talking about literally no matter what happens. Okay, price can be in this range, guys, for, I mean, a month if it wants to, right? It could do a lot of this sideways price action. As long as we do not really violate these lows, then I still believe we're going to experience a lot more upside, right? So just keep that in perspective, right? Keep that in mind as well. But what I'm very interested, guys, is, you know, seeing how we react off of this level right here of demand. Okay, so this is going to be my first area I'm going to be paying attention to. And then my second area is going to be this entire mitigation zone down here, this mitigation area, all right, which is, again, another area of demand. I think that the market can realistically find, again, demand for the dollar at one of these levels. Now, if we start to fine-tune them, you could definitely fine-tune them, you know, for all my smart money traders, right? Obviously, when you're trading, you know, that smart money concept, you're really just taking trades from, you know, key areas of supply and demand, right, at the highest or the lowest point of, you know, certain ranges, right? So my smart money traders will probably be looking for, you know, again, this is probably not even the best for smart money, because smart money traders are probably going to think that this low is going to get taken out, all right, and then do something like that. Okay, but just keep in perspective, you know, what we could look for, guys, is, again, just identifying where momentum has picked up in the past, which is right here, right? And then obviously we clearly have momentum down here, which sent us higher. And then whenever we do get into those areas, to pay attention to price action, right? Because price action is going to tell us exactly what to do, right? What I mean by that is, when price action does start to get into this area, we're going to start to notice it get very choppy, right? And the choppiness is the first clue. Now, off of that choppiness, if you know what you're doing, you can absolutely take advantage of, you know, the moves and try to capitalize off that, right? You know, taking a little bit of a aggressive entry to try to get a, you know, obviously a better risk reward. Or when we are starting to see price coming to that kill zone and we're starting to notice it slow down, right? That's when we want to see that change of character or that break of structure, right? We want to see that sign of strength come in, okay? Once we get that sign of strength coming out of a key level of demand, that is usually all I ever need to go ahead and take advantage of the opportunity, right? Because from a bigger perspective, a sentimental perspective, I'm bullish all day. From a technical perspective, I'm bullish all day still. It's just a matter about where can we potentially look for trades from. And when we highlight those key levels, then we literally be patient and wait for the market to tell us what to do. Now, this is the thing about this, right? There's going to be different ways that this is going to look, right? Because right now we're on the 1 hour time frame here for the dollar, right? For the dollar index, let me just go ahead and highlight this again. All right, so guess what could happen? That same exact thing that I just talked about, right? It could very well happen, right? But you got to understand, right? It could happen on different time frames that you're not even looking at, right? So what I mean by that, well, there could be a time, guys, when price, let me actually go ahead and just start drawing candles, actually, right? So I'm going to start drawing candles. It's going to be bigger just so you guys can, you know, pretty much get the picture, right? But there's going to be times where we can see price actually go ahead and get into this level, all right? And let's say that this is an actual bearish candlestick. All right, we can see it into this level. And then the next hour, right? Like the next candlestick that comes out, the next hour candlestick, you know, we actually see price end up doing something like this, right? Giving us a nice strong reaction, nice engulfing, right? And then we see a nice little retest of that, you know, that candle that just got engulfed, right? And then, you know, we can see the continuation, right? Now, for something like this, how can we actually get involved? You know, if we're being patient, right? That's the question, right? Abel, you just said when price gets into these areas, you got to be patient, right? Well, if we're too patient and we're trying to wait for that structure to start to form, we could have missed out on this trade here. Well, this is again what I'm talking about. Time frames also matter, because what I like to do, guys, once we are in areas of interest, I always go down a lower time frame now, because guess what? Lower time frame, guys, this 1 hour candle, all right, or these 1 hour candles right here on the 1 hour time frame, these can actually go ahead and form that structure that I was telling you guys about, right? It could come down to these time frames on the smaller time frame, and you can absolutely see, you know, that build up in structure, right? That momentum slowing down, and then you can see the break of structure. You can identify all that stuff still on the smaller time frame. Okay, so that's something that, again, you can really start to take advantage of, utilizing the smaller time frames when price gets into those point of interest, so that you are able to actually identify those things. Because trying to identify it on the higher time frame, right? Yeah, there's going to be times where you can do it for sure, but then there's going to be times where the market just gets there and then just absolutely just leaves, and now you missed out on that entry. So that's just something to keep in mind, guys, for sure, right? But overall, what do I think can happen for the dollar? I mean, I do believe we are going to experience some selling pressure, right? And I think off of tomorrow's release, I do think that we probably will experience some selling pressure, especially to probably close some of this imbalance, right? This clean traffic. So my areas that I'm going to be interested, guys, is literally just going to be back into these demand zones, right? If we are able to see price spike down into this level, I would not be scared to go ahead and take that trade. Right? Again, it's just me. All right? I would be very comfortable taking that. Because again, I'm still very much bullish. And I do believe, this is just me, but I do believe no matter what happens with interest rates, right? Unless we come out of like, I mean, shit, I think no matter what happens with interest rates, I think no matter what, any type of dollar weakness that we experience will be short-lived. Okay? Any type of dollar weakness that we experience will be short-lived. That is just my opinion. Again, I'm only human. I could be wrong, so don't destroy me if I'm wrong, right? But overall, we've been accurate, guys, this entire time, and I'm sticking with that, you know, until further notice, right? So that's just pretty much my overall bias for the dollar. Just based on where we're at, you know, at the very least, I just want to see us come down to this 108 and then potentially go ahead and go higher. Now, if we run this 108 and obviously just continue to break it, then we're probably going to have to come all the way down to that 104 level. Right? So that's just what I'm looking at for the dollar, guys. I mean, I'm just still so bullish on this thing, man. Like, it's just market conditions are just telling me that we still look for buys. Right? Still look for buys. Just make sure it makes sense. Right? So if we can get a spike down into here, then that would be super, super attractive for sure. Right, let's see what else we got here, guys. Let's see. Let's see. Do you ever feel like the U.S. could possibly in the future pay people salary and control their spending habits and provide them food and services if AI take over? Because Elon said AI is worse than nuclear, right? He clearly knows something we don't. I mean, yeah, one thing about Elon, he's definitely that man is operating, you know, 20 years in advance from us, right? Like that's one thing I want y'all to really get on, right? You know, there's really people that are really operating in the future today, right? That are planning things in the future today, right? You know, even myself, you know, I'm a visionary, right? Things that I'm doing, you know, today are really planning for, you know, plays that I'm doing 5-10 years down the road. But somebody like Elon, that dude is like 20, 30, 40, 50 years ahead of everybody, right? He's next level, right? So that is a very possible thing, a possible outcome that could potentially happen. Obviously, in the future, we really don't know because AI is absolutely advancing at rapid speeds. So I don't know. That's going to be very, very crazy to see what actually does happen, though, when it comes to something like that. Let's see. Why do you think it's got so much more to go? I've heard many people say that this post should be or close to the bottom. I mean, you're gonna hear a lot of people say a lot of things, all right, and that's just the reality, right? Yeah, I know we got the boy Skaggs and we got the boy Kyle in the Zoom, right? Because I do got some guests with me tonight, family, that are also gonna go ahead and provide you guys with some value tonight, right? So I know y'all gonna be excited for that, because these dudes is next level for sure. Right, but let's see. Abel, found the logic of bank rates. Why is it that you always preach GJ instead of NJ? Because I've been trying to play it just based on that logic. The trades almost never play out like GJ, right? So you want to look at, you said you looked at NJ is what you were playing. Let's take a look at NJ, right, and see what NZDJPY is currently doing. Sheesh. All right. So NZDJPY, I mean, clearly this thing has been bullish, right? Currently, it has been bullish, just like every other yen pair has been bullish, just like we've been talking about, right? The thing that we've been noticing, though, is that for the past week or two, right? Yeah, for the past week or two, we just been in this little bit of a pullback, right? So overall, you know, the concept that we talk about when it comparing, you know, interest bank rates and things like that. Oh, excuse me. Let's go ahead and bring those up, actually, so everybody knows what we're talking about. Right, so if we're looking at, you know, the Bank of England, they're at 1.75, where the Reserve Bank of New Zealand is at 3.0. Okay, let's keep that in mind. So if the Bank of New Zealand is offering 3%, right, let's just use it in terms of, you know, percent return, right? If the Bank of New Zealand is offering 3% return on your money for investing into them, right, and you compare that against the Bank of England at 1.75%, right, what do you think is going to be more in demand, right? Is it going to be the New Zealand, or is it, or matter of fact, I'm looking at the wrong one, right? We're talking about NJ, right? So you want to look at the same concept. The Bank of Japan is still negative, right? So I mean, again, you want to get 3% on your money, or you want to get negative 10% or negative 0.10% on your money, right? So when we look at, you know, things like interest rates, we're only looking at it from an interest rate differential perspective, right? Write that phrase down, interest rate differential, right? And go do your research on it, okay? You don't have to just obviously just only take my word for it, you know, but definitely go ahead and do your research, right? Interest rate differential. So when it comes to understanding how the interest rate differential works, right, the currency or the central bank in this instant that is offering a higher rate is usually a lot more attractive for foreign investors, which will cause the demand for that currency to be more stronger compared to, say, the Bank of Japan's. So with that said, right, we have been experiencing some pulling back here, guys, for the yen, right, for New Zealand yen. But overall, I'm still very much bullish, right? I'm still very much bullish, right? I still very much bullish. The key is, though, where can we actually go ahead and start to turn around from? Well, I would be interested in seeing how price comes back down to here to these lows. All right, I'll be interested in seeing how price comes back down to these lows. Right, if we're able to see price come back down into this level, right, and then I don't know, off of there we could potentially really find something, right? But overall, the main thing here, guys, and again, for me, I'm still very bullish against the yen. Even though we might just by looking at price action right now, this looks like it want to do something like this, right? Overall, though, when we do get down to, say, these levels where we do have evidence of structure in the past, you know, we could look for an opportunity to go ahead and, you know, go back into that bullish trend overall. You know, because we have been bullish. You know, the New Zealand has just been a lot more attractive against the yen, just like every other currency has been. So I hope that makes sense when it comes to that interest rate and the bank rates and stuff like that. Let's see. Yay, finally caught the live. Hola, bonjour. Hello. Hello, sunshine. Bonjour. Right, I'm a newbie, of course, right? I absolutely love all my newbies. In fact, I feel like I'm the best channel for the newbies. Why? Because I actually come from a background of literally teaching Forex basics. And that's what I've been doing for the past 4 years, right? Literally teaching Forex basics, guys, for thousands and thousands of students. So that's literally my background, all right? So I'm very good with the basics. Let's see, EJ Erkin, man. I gotta show you love, Erkin, man. You've been on EJ literally since yesterday. So let's go take a look at EJ right now. And I'm gonna go ahead and pass it off to some savages, right? Because we do got some savages with us tonight, right? Let's take a look at this, right? So what did I tell you guys yesterday? EJ, what we say yesterday, EJ, right? Or Erkin? What did we say yesterday, Erkin? right? Remember this, right? Again, this is the play that you really wanted. Okay. It's still possible for us to actually go ahead and continue bearish, in my opinion. At least for right now. Right? Just like how NJ, I think it does look like a short-term sell-off. I still think there's a very good possibility for this to continue selling off. Right? I think there really is. Now, do we want to sell off right from this level right here? Hell no. All right? Just because I do believe that something can sell off does not mean I just want to sell right here. Hell no. Right? I want to make sure I get in at the best area. So if I am looking for another sell opportunity, guys, for EJ, right, I would want to be, and this is me, I would want to take it from maybe up in these levels. All right, let me actually go ahead and fill this zone out, right, so you guys can see it. I would want to sell from up in these levels, right? So if we can, I'm not sure if we're gonna, but if we do see an opportunity to go back up there, then that could really be another potential re-entry, guys, for EJ. Right, it does look pretty decent, does look pretty juicy. Right, so yeah, you know, that's definitely something, you know, something for sure that somebody could go ahead and take advantage of for sure. All right, let's see what indicator that you are using. So the only indicator that I have on my screen is the MACD. All right, that is literally the only one that I have up right now. Let's see, the rising interest rate on USD is good for traders. How do you see the FX market when country and corporate debt servicing starts to bite? That's a great question, by the way. Right now, obviously, that's just gonna add into pretty much what we've been experiencing, right? Because obviously, right now we have like a bunch of different factors, guys, that's causing consumer confidence, investor confidence to be at, you know, very low levels right now, right? So when we start to actually add into, you know, talk about country and corporate debt and all that stuff, it's only gonna add more fear, uncertainty, and doubt into these markets, which is only going to continue us, you know, having that risk-off type sentiment, right, where the dollar is going to continue to benefit from that, right? Indices are going to continue to fall. Stocks are going to continue to fall. Cryptos are going to continue to fall, right? So, I mean, that's only going to continue to add into the chaos that we're already experiencing, right? So that's only going to add to the fear, all right? And during times of fear, you know, the dollar benefits, government bonds benefit, and all that stuff, you know, that's how it goes, right? So that's just my opinion, Michael. Let's see. Don't forget, y'all, party this Friday, right? So we do have the boy 20 Pips Savage. For any of you guys that are in my communities, right? We are hosting they're hosting an actual, you know, a party, right? A little trading party, right? Which is actually going to be pretty lit, right? So if you guys are a part of the community in the group chat, make sure to be aware of that, because the boy 20 Pips Savage is going to be hosting a party for y'all, and it's going to be lit. And you never know, I might pop in too and show some love, right? And really turn up with y'all as well. Let's see. First time plugging in live with you, bro. Let's go, Mike. I appreciate you. Right, I appreciate that a lot, guys. So, let's see. Hit the like button. I love you. Man, Martha, man, I got a lot of love for you, man. Because you always the one really telling people to hit the like button. So, I appreciate that as well. Let's see. Can the Bank of Japan increase interest rates also tomorrow? Very possible. Right? It is very possible. We're getting to a point, right? And I'm pretty sure we're getting to a point now, guys, where the Bank of Japan they're like gonna be forced to have to do something, right? Because they cannot just continue to devalue their currency the way that they're doing, right? So there is an opportunity, a potential for them to actually raise rates. You know, it is. I'm not gonna rule it out. But now, if they do raise rates and they, you know, get out of that negative territory, then yeah, we should expect yen strength. Right, and then everything we're talking about with, you know, GJ continuing going bullish, NJ continuing going bullish, you know, we might experience, you know, a short-term, you know, turnaround on those things. All right, so just keep that in mind, guys. Right, if the Bank of Japan does actually start to raise rates, which they haven't done in years, but the moment they do start to raise rates, you know, it's gonna give them massive strength. Right, so just keep that in mind for sure. Right, let's see. Can you go over the 2-year thing from earlier you was talking about, right? That was some sauce, Oscar. I don't know if I should give everybody that type of sauce. Psych. That's what I do, is give you guys some sauce. So I'll talk about that in a little bit, right? I don't want to take too much time because, like I said, I do got some guests on the call as well that want to give you guys, you know, some gems, some value, really just help you guys overall, right? But what we were talking about earlier, guys, is just pretty much, you know, utilizing government bonds as a way to, you know, predict sentiment in the market, right? Not just sentiment. You could predict, you know, what the dollar is gonna do. You could predict what indices are probably doing. Like utilizing bonds is such a great way to really, you know, tell you what the current sentiment of a market really is, right? And whenever we identify, guys, or whenever we see bonds flying like this, right, bullish bond market like this, right, where the actual yield is just going through the roof, this is showing us how much fear there really is in the markets right now, okay? Because this is telling us that in order for investors, or right now that the demand for the 2-year bond is through the roof. Why? Because that means that everybody is expecting a lot more downside in these markets, at least over the next 2 years, right? Because big time investors and traders, guys, when there's, you know, downturns in the market, they liquidate out of those riskier assets and they go ahead and they purchase a ton of government bonds. Why? Because now they're getting a guarantee back on their money, right? Whether it's 3-4%, they're getting a guarantee back on their money, as opposed to having it in the stock market when you know there's a big chance for it to actually continue to drop and you're only going to lose value, right? So these bonds definitely tell us a lot. You know, they tell us a story. But one thing that we can also look at the bonds for and really understand is currency strength. Right? I said this earlier, guys, and this is such a nugget. I hope it didn't go over everybody's head, right? Because I talked about this earlier, right? I said what most traders that you're going to identify here on YouTube, right, when they're talking about currency strength, they're going to have you guys go to this right here, right? They're going to be like, yeah, man, if you want to know what currency strength is, come to one of these meters. Yeah, man, come to this one right here, bro. You guys like my accent, right? Yeah, bro, come to livecharts.co and look at this currency strength meter, bro, and use this. Right, guys, this tool right here is telling us current strength, right now strength, but it's not telling us the strength in the hour. Right? This is not helping us predict future strength. Okay? So utilizing something like this is really not doing too much for you unless you're trading something fast-paced like options or something like that, right? But for us, this stuff really is not going to help us. But this is what everybody's going to tell y'all. But what we do, what professionals do, right? We can simply utilize bonds to tell us what the strongest currencies can really be and what the strongest currencies or which ones are more attractive, and utilize that as a way to really predict currency strength. So what do I mean by that? Well, if we come here, guys, and we look at the 2-year bond, the 2-year bond is giving a yield of almost 4%, right? They're at 3.95%, which is actually pretty crazy, right? But it's at 3.95%. Okay, that's a pretty decent yield. If we look at the next one in line, we got Canada, right? Their 2-year bond is at 3.78%. Okay, so it's a little bit less than the U.S. Now, one thing I've been telling you guys as well, anytime we talk about the CAD, is that the CAD is also pretty strong, right? It's not as strong as the dollar, because the dollar is just the daddy dollar. It's the most dominant. Right, but it is up there, right? And we can see that by just looking how similar, how close they are in terms of, you know, government bonds and its yield. And then the next in line, then we have the Aussie. The Aussie's at 3.3%, right? Then we have the UK, Great Britain, right? They're at 3.2. Then we have the EU at 1.7, and then we have obviously the Bank of Japan. You know, they're just they're way off the map, right? They're way off the map. Okay. So again, when a lot of these different governments and foreign, you know, entities, when they're looking to park their billions of dollars, they're gonna look at these, you know, bonds and go with the one that's giving the highest rate of return. So when we're trying to figure out currency strength, we can utilize these bonds by literally comparing the yield amongst each other. And what we can assume is that the one that's offering a higher yield is going to be the one that's more in demand, which will be the one that's stronger for that pair, right? Is this making sense, guys? Right? And big shout out to Gonzalo, right? Big shout out to Gonzalo. Welcome to the family. I appreciate you, Gonzalo, right? Because now you're a part of the Wealthy Fam. You also get added into our private community, so please send me a message on Instagram. My Instagram is right below my pretty face, so I can go ahead and get you added into the chat. Let's get it. Let's get it. I appreciate y'all. But family, is this making sense now? right? Drop some threes in the chat if this is making sense, right? In terms of currency strength, it's by simply utilizing bonds. The currency that's offering the highest bond or the highest yield is usually going to be the one that's the most dominant. Sheesh. I don't know about y'all, but yo, that's some next level sauce right there. Like I said, this is some next level value, family. Right? Because there is a lot of different tools that us as Forex traders can utilize to really start to predict a lot of these moves. Right? And government bonds is just another one of those tools. Right? And I actually heard this quote. Yesterday, guys. That actually was pretty dope. Right? Because it kind of correlates with, you know, everybody's journey. Right? So, right now, every single one of you guys, everybody that's trying to learn how to trade, okay? What we all do, or what we all did, is we all came into this market, all right? And we came into this market with a toolbox. The only thing is that the toolbox is empty when you first actually get started, right? And in order for you to actually fill that toolbox, you have to actually learn a lot of different things, right? So right now, guys, all you guys are doing throughout the process of learning all this stuff that I'm giving y'all is filling up your toolbox. Filling up your toolbox. Filling up your toolbox. Right? And the more hefty that toolbox gets, the more tools that are in that toolbox, the easier it's going to be for you to absolutely fix the problem. Or in our instance, absolutely go ahead and accurately understand exactly what these markets are about to do. So family, all we got to do is continue to fill our toolbox. Right? So how many of you guys in the chat, right, drop a 7 if you're making that commitment to continue to fill your toolbox? I better see a lot of 7s. Because again, I'm still filling my toolbox, and I'm going to continue to fill my toolbox until I'm a $1 billion trader. That's just me. Right? So my toolbox is still halfway empty. Like my toolbox ain't even nowhere to be filled. Right? And the next individuals that are about to come up as well, their toolbox are filled, but nowhere near filled neither. Right? And that's what I'm excited about bringing up these next individuals, because now they're about to give you guys an insight on their journey, on their trading strategy, how they approach the markets, how they look at the markets. And these are individuals, guys, that been also trading for 4, 5, 6. You know, the boy Skaggs been trading for 7+ years as well. Right? So again, if I'm ever giving anybody a platform on YouTube that I want my audience to watch, then you best believe it's going to be somebody that's bringing massive value, right? Somebody that's really real in these markets, right? So, with that being said, guys, what I want to do is I actually want to go ahead and introduce, right, a young legend, a young lion, so that he can come on here, guys, and provide you guys with massive value, right? And the cool thing about this dude is a savage, but he's also so still young. It's absolutely insane, right? I literally started seeing this dude trade. He started trading, guys, when he was 15 years old. I'm not making this up. He started trading at 15 years old, right? That's when I first like really got introduced to him, and I seen him start. Okay. To see where he was at 15 to now where he is now, I think he's what, 20 now, is absolutely insane. Right? The dude has literally not just elevated his trading career and his trading journey, guys, but he also elevated, you know, hundreds of people around us as well, right? He has exposed hundreds of people to trading and has taught hundreds and hundreds, probably even thousands of people how to trade as well. So definitely be excited, family, for this new person, or not this new, but this person that's about to come up, because he, like I said, he's about to bring a lot of value, drop a lot of nuggets, and I know for a fact he's going to take you guys on a ride for sure, right? So without further ado, we're going to go ahead and introduce the young beast, Mr. Kyle Prasad, the teenage trader himself, right? So let me go ahead and make him host, and he can go ahead and do what he does, right? So you are a host now, my brother. So go ahead and do what you do, bro. Let me see. Hold on, let me make sure that they can hear you. Kyle, are you talking, bro? I can't even hear you. Hold on. Give me 1 second, bro. Hold on. I got you on the wrong speaker. There we go. Now they can hear you. Yo, you can hear me?
Okay, okay, that. First things first, guys. I just want to say I appreciate Abel. Yeah, can you hear me?
Yeah, you're good to go, bro. Go ahead. Share your screen so they can see your charts. But go ahead. You're good.
A little bit of an echo.
Don't worry. I'll fix that. Go ahead. You're good.
Okay, okay. Yo, yo, first things first, guys. I just want to say I appreciate my brother Abel for going ahead and staying consistent in each and every single one of these live streams. Because, I mean, at the end of the day, he's been very consistent every single week, week in, out, 3 times a week. So, can everybody drop a 777 in the chat? Actually, no, go ahead and drop a 222 in the chat. We've been dropping sevens. Go ahead and drop a 222 in the chat because he's been consistent. He's been really running it up. And, yo, I strive to have that consistency just like my brother Abel. So, just give me a second. Let me turn my camera on. Um, Let me know if you guys can see me. I'm actually out here in New York right now, still running the live stream no matter what. So, okay, I see y'all dropping the twos in the chat. So I do got the chat box open, and it's crazy because my brother Abel really just dropped a lot of sauce, a lot of gems. Honestly, he killed it tonight. I do got 1 or 2 things that I do want to go over with you guys, but I'm gonna just keep it real. Abel really just gave y'all the breakdown on what's about to happen in the markets within the next week or two. I mean, just being honest, I pretty much have a lot of the same things that he has, especially the dollar index, especially the euro, the Great Britain. I mean, almost every single chart that he has marked up that he has shared with you guys. I pretty much have the same exact things, just maybe a little bit different. So first things first, I think he went over this with you guys, but I'll just go ahead and go over it one more time. And it's the economic news. As you guys know, as he mentioned, tomorrow, 2 p.m., we have some heavy red folder news, which is the FOMC statement. And, technically what I like to see happen with some of these news is it's like my brother Abel said, the press conference is really going to show us what we really want to see. Whether the market is going to continue in the direction that the news has released in, or sometimes the market, what it likes to do is at 2 p.m. of the statement release, it likes to do a pump in whatever direction it releases in, whether that be up or down. And usually what tends to happen is at 2:30, the market, when the press conference starts or when the press conference commences, then the market will sometimes whipsaw and wick down or wick up in the complete opposite direction and just continue going in that direction. And sometimes, we see that happen a lot with these FOMC newses where, as soon as the news would release, the market would reach down or reach up to a specific point of interest or a specific supply or demand candle. And, at the press conference release, sometimes the market would completely just whipsaw in the other direction, mitigating that point of interest and literally going in that direction of the market for the remainder of the day and sometimes even the remainder of the week. One thing I do want you guys to also be considerate of is tomorrow we're going to get a lot of movement, but on Thursday we might not even get much movement in US dollar. So that's why, a lot of traders, and, I'm pretty sure Abel has told you guys this. I'm pretty sure you'll hear it from me, Skaggs, Ray. You're hearing from all of us is that you don't need to trade necessarily every single day. Not every single day there will be an opportunity in the markets. You know, every single day, are there opportunities in the market? Yes, but high-level traders don't need to catch every single opportunity in the market. They just need to catch the specific opportunities that meet their trading plan and meet their risk to reward plan, right? Because you trying to catch every single move in the market, you trying to catch every single buy, every single sell, every single move that you see doesn't necessarily mean it's the most profitable move. Doesn't necessarily mean that it's going to be the highest risk to reward. And sometimes you'll be breaking your trading plan. You'll be breaking your strategy. So at the end of the day, stick to what you know best, and what's not broken, don't fix it, right? So Thursday, I don't really expect too much moves in the market, and especially all week since we haven't really had any US dollar news, and the pairs that I trade are majority US dollars. I haven't even taken a trade all week, right? A lot of people find that, you know, especially beginner traders, and especially when I was just beginning trading, you know, a lot of people I would hear that are professional high level traders, it would be like Wednesday, and you know, they'll be like, hey, I haven't taken any trades this week. And that's the case of me right now. I haven't taken any trades this week. I haven't traded Euro, GBP, CAD. Those are my main pairs, and I haven't even placed a trade. And, you know, at the beginning, when I first started trading, I used to think that that was just like mind blowing. I used to think that, yo, how can it be Wednesday and you haven't even taken a trade? You're missing out on all the fun. You're missing out on everything. And one thing I could just teach you guys is that, you know, if there's not an opportunity, I won't take it. If there's not a high risk to reward opportunity, meaning it's low risk and it's high reward, you know, even though there may be actual opportunity, if it doesn't meet my trading plan, I'm actually better off not taking it at all. Because what you guys need to realize is that sometimes no trade is also a trade, right? No trade is sometimes the best trade, right? Because you don't lose anything and you don't win anything, and you're actually surviving to trade another day, right? That should be one of the biggest tips for all of you guys as traders, especially us going into a news release. The markups that Abel shared and the markups that I'm sharing with you guys, I mean, we're pretty confident that it's going to hit, right? We're pretty confident that everything that we show you guys in the market, like, we're pretty confident in our abilities that our markups and our trade ideas will follow to the T. But I mean, at the end of the day, sometimes you guys need to realize is that sometimes you do have to just stay out. Sometimes if it doesn't hit our specific points of interest, or if it does hit our points of interest and it doesn't make our desired reaction, sometimes it's better off to just stay out. Sometimes it's better off to, even if you're so tempted and you don't want to stay out, because it happens to all of us, right? We all have this little bit of greediness. We all have this little bit of FOMO in us, right? We all have this little bit of temptation that, hey, I want to be in the market today because it's a big news release and I know the moves are going to happen, right? And sometimes we have this little urge that, hey, I know moves are going to happen and I don't want to miss out on any of them, and I don't want to not take a trade. So what you do in this scenario is you lower your risk immensely, right? So like, let's say tomorrow, you're not really sure what the market is going to do, or guess what? You see an opportunity, but it may not be the highest risk to reward, right? Which happens, right? Sometimes I see an opportunity in the market, and, you know, sometimes the risk to reward isn't as top tier as I would like it, right? Sometimes I would see a trade and I know it's going to go in my intended direction, and I'm confident it's going to go in my intended direction, but it's not that perfect low risk, high reward setup. So in this scenario, what you would do is you would cut your risk in half or even by fourths, right? So no matter what happens to this trade, I mean, you will still have enough capital to trade another day. And even if it does win, you do get at least some profit out of that trade. You know, I'm a firm believer that if you keep trying to hit home runs over and over and over again, eventually you'll strike out, right? But if you go for those medium tier hits, if you go for those low tier hits, I mean, you can slowly build your way for that home run, right? I mean, especially if you play baseball, not a home run is going to happen on every single pitch. But if you just keep swinging, you just keep swinging, you just keep swinging, you know, the runs over time will add up. So that's my rant. Also, like I said, Thursday, it could be a no trade day for me, and I'm completely okay with that. On Friday, I want you guys to be aware that Fed Chair Powell speaks at 2 p.m. A lot of times when the chairman Powell speaks, just like volatility comes into the market in the direction that it's been going into already. So pretty much that's why FOMC is very important tomorrow to see what's going on with the markets and what's really the direction for the rest of the week. Um, so if anybody has any questions, you can go ahead and drop it in the chat. But if you don't, I'll just go ahead and go into my chart real quick. First things first, I know Abel went over the dollar. I'll go over my perspective. So here's my outlook, right? So I have a couple zones marked up right here. Pretty much, guys, what we're looking at is, let's say, London is very, very key for what's going to happen tomorrow, right? The thing is, there's sometimes not enough data at this current point in time for us to make an exact prediction. That's why, sometimes we'll give you guys, maybe multiple levels to enter off of, because, there may not be a lot of data or enough data for us to get an exact entry point. That's why when we wake up first thing in the morning, there's pretty much the most amount of data before New York session as possible. That's why we like to be focused in on the charts early in the morning so we can analyze as much data as possible. So, just being honest, guys, I have a level up here, which is pretty much the last up candle for the US dollar. And you could even mark this right here. And, this is my analysis. These are two buy zones for me, right? These are two buy zones. How I got those buy zones, somebody asked, what are some good entry points for you, like for your favorite setups? I like to look at the 4-hour time frame, right? So just me being honest, I like to really not enter unless it's mitigating off of a 1-hour candle and a 4-hour candle, both combined. That's called confluence trading. So if I see a setup on the 1-hour, I'll take it sometimes. But my preferred setup and the setups that I really like to take are only going to be on when a 1-hour candle meets a 4-hour candle. So yeah, a lot of you guys would be like, hey, isn't this a good candle right here that I can enter off of? And yes, technically speaking, that would be considered an order block. That would be considered that little, Pepe, whatever you like to call it. It shoots down and then it goes up. And this could be considered a mitigation. That's just a 1-hour candle. And honestly, I don't really put those with priority, right? If I were to take a trade like this, I'll be putting it at like a half risk or quarter risk. If it's just only a 1-hour candle, I only see a 1-hour supply and demand candle. Yeah, I'll take it, but I'll take it with very minimal risk. But the trades that I really go in on, the trades that I really pay attention to, is when there's a 4-hour candle and a 1-hour candle meeting. So that's why I have this zone marked up over here, because it's actually a 4-hour candle and a 1-hour candle that met. So, my bias, guys, is let's say we reject off of here. If we reject off of here, then to be honest, guys, we can see the dollar reach back down into this zone and then go up. Or sometimes, guys, we can wake up and the dollar could be already broken structure up here. And then we can go ahead and play off of that. Right? That's also a possibility. For London, it can break structure and then we can get something like this. But another scenario is, let's say tomorrow morning we wake up and it rejected off of this and it broke structure, then I would actually be waiting for the buy down on this level. But that's asking for a lot, to be honest. That's asking for a lot. So, at the end of the day, guys, just have these two zones marked up. And another thing is you guys can also hedge, right? One thing I wanted to like go over, pretty much the one main thing I want to go over before I pass it off, is something called hedging, right? So hedging is basically something I like to do like before news, right? I like to do this before news because pretty much it gives you an opportunity to get in the market and make profit pretty much no matter what. Drop a one in the chart if you've ever hedged the market, and if you guys know what that is already. So hedging, this is the short term definition for it is taking both sides of the market basically, right? That means you may not know. That means you may not have as much data yet where the market is going to swing to, but you're taking entries on both sides just to make sure you're in the market for no matter what happens. And that's something I like to do a little bit before news. So like for example, I'll give you guys an example of a hedge opportunity. But what you can do is you can actually hedge and like sell, basically buy all dollar pairs when it hits up here, and it'll probably give you some profit, right? It'll probably give you some profit, maybe here or maybe to here. So what I would do is I would take a sell, and as soon as the sell goes like 20 pips in profit, I would move my stop loss to break even immediately, right? Like when you're hedging, you want to basically be as risk off as possible. Like you don't want to have no stop loss or like things like that. Like you don't want to like risk it. You want to be in a trade, move your stop loss and profit, and then when the opportunity comes for you to take the other side of the market, then you take it. And then once you move in profit on that trade, then you move your stop loss and profit as well. So like a good example would be, let's say, and this would be in a perfect scenario. Let's say the market would come up to here, you sell, you move your stop loss at break even, and then the market comes down to here, you buy, you move your stop loss at break even. Now all of a sudden the market's in the middle and news, it doesn't know what it wants to do. It's just consolidating. You have two trades at break even basically. So let's say the market decides to just dump, then you're at least in this sell right here. Or let's say the market decides to just go to the upside. This sell would be taken out, but you would still be in this buy. So, that's really what hedging is. And, this is a good example of like a hedge. I could show you like examples on Euro that it has like given some good hedging opportunities. So, for example, I actually took this sell right up here. If you guys are plugged in with me, you guys already know I took this sell, and I pretty much told everybody that I was selling right here. And little did we know, like this was right before CPI news last week. Drop a 3 in the chat if you were trading CPI news last week. So on CPI news, honestly, like I wasn't really expecting much from this. I was just like, yo, like I'm gonna sell right here, just my stop loss up here, and it correlated with this 4-hour candle. So that's my signature setup. If a 1-hour candle correlates with a 4-hour candle, then that's my perfect setup. So I just took it. But a great hedging opportunity would look something like this, right? So let's say you were torn. A lot of people were torn. I was torn too for the CPI news. Whenever there's news right before the market, I mean, nobody knows exactly what's going to happen except for the ones controlling the news. We don't know the exact number that's going to come out. All we can do is just make high probable guesses, right? That's what we are as traders. You know, we make high probable we make high probable identifications and guesses on where the market's going to go. And it's up to our trade management plans and our risk to reward plans to save us and make sure that we're profitable. So that's why it's good to have a good trade management, a good trade plan, and a good risk management plan. So at the end of the day, you all come out profitable no matter what. So like a good way to like hedge. Let's say you didn't know like what the dollar was going to do. You could have took a buy right here, and then let's say you're waiting for Euro USD to drop. I'm gonna be honest. I actually took a sell right here. I didn't really like. I actually didn't even win right here. But a good opportunity that you could have hedged is you could have took a buy right here, and let's say you sold right here. Still hold on to this buy. But you could have sold, and it actually just ended up stopping you out. But you still hold this buy as leverage, as extra profit, extra risk that you can use on these sells. So pretty much, I mean, you took this buy right here, and then you take the sell. The sell stops you out, but you're still in this buy. So then guess what? You go ahead and you take the sell again. It stops you out again, but you're still in this buy. And then another scenario is you could have took this buy right before the news. Let's say you didn't know whether it was going to keep going up or keep going down. Right before the news, you could have took this buy right here off of this little retracement. I personally didn't, but you could have took this entry, and then once it goes in profit, then you would have moved your stop loss to break even right here. And then you could have took your entry for the sell right here, just like I did, and then move your stop loss and profit. Pretty much the buy would have got broken even, and then the sell went deep in profit. And as you guys can see, that sell is pretty much running. Oh, shoot. My bad, guys. As you guys can see, that sell is pretty much running. So, yeah, guys, I mean, that's like a hedge opportunity. I mean, obviously, you don't have to do that. But if you're experienced on hedging, just know that it's something that I like to do before news. So for Euro, I mean, these are my two levels. I like this candle right here. This candle is cool, but it's not preferred because, again, I need it to line up with a 4-hour candle. This right here lines up with a 4-hour candle. So we're most likely be seeing something here. Let's say the market just breaks above right here. Then we can see this 4-hour candle get mitigated. Now let's say, all of our biases are completely incorrect. That's something you should account for too. Let's say the dollar doesn't want to go bullish tomorrow. It wants to go bearish. This would be a nice area to hedge. So look at this. Let's say the market comes here and then goes down. What I would do is I would take the sell from right here. And since we're in so much profit from the sell, I would use some of those profits to enter the buy right here. And then let's say the market does give a little bit of a reaction right here. Now, let's say we're in this little consolidation point right now. This would be like a good hedging opportunity, right? Hold on. So we take the initial sell, the market drops, and then we come down to this level. We're in this sell already, so we take this buy, obviously with lesser risk. And now the market is kind of like in this little consolidation area. Now, no matter what the market does, we have an entry on both sides. So let's say the market decides to just obliterate down. We still have this sell, but the buy gets stopped at even. But let's say for some odd reason, which does happen in the market a lot, some odd reasons, some odd things happen in the market a lot, These things happen a lot, some weird market scenarios. happen a lot, and you want to just account for them, right? You don't want to be like, damn, the market sucks. Like, bro, the market just does whatever I don't want to happen, or I'm so unlucky. The market is out to get me. You want to just learn how to account for these things in trading. It's like tuition. When you go to college, you have to pay tuition. You have to pay, you know, for the classes. In trading, you have to pay something. It's not just you make money for free by just clicking buttons. There's always something. There's always some sort of expense, and the losses are the expense. So just learn how to account for them. So let's say we account for both sides of the market, and the market just shoots up. Obviously, this sell will be taken out, but we have this buy. So that's just something to look at for euro. I mean, for GBP and USD CAD, there's really no hedging scenario. Like, let's just be honest. This thing is just flatlining. So, like, I would just be preferring sells. Right? I have no hedging opportunity for you guys on GBP. Just look for straight sells, right? And, don't sell at the bottom. Wait for a good retracement and pull the trigger, right? Once you get that good retracement on GU, just pull the trigger again to the downside. Don't even try to hedge this. USD CAD, same thing. Don't even try to sell this, right? There's no clear good risk to reward opportunity that we can sell this off of. The only best scenario, or the only best, smartest risk to reward scenario would just be waiting for this buy right here. And as you guys can see, it correlates with this 4-hour candle. I also like this 4-hour hidden demand, right? That's why I kind of marked it a little lower. But at the end of the day, I prefer to just wait for news to release, see if we get a nice wick down to some of these areas, and just continue buying UCAD up. There's no real sell, right? There's no good risk to reward for a sell to hedge this. So just wait for the buy. And again, that's why I haven't really taken any trades any week, all this week, right? Because I didn't see my best risk to reward scenario. And that's fine. You don't have to trade every single day. Just know that those 1 or 2 trades that you take could be the trades that leave you done for the next 2 weeks or even a month, right? 1 good trade can have you good for the month, right? 2 good trades can have you good for the month. All it takes is 1 to 2 good trades to give you a good 5 to 10%, and you're already doing better than most funds. You're already doing better than the stock market. You're already doing better than the real estate market. Just with 1 to 2 good trades with 10% each. That's 20% a month. A lot of stock traders don't do 20% a month. And a lot of real estate markets don't do 20% a month. So you're doing good if you can hit 2 good 10% trades a month, right? Or even 3 to 4, 5% trades a month, right? Break it down. If you're looking for 20% a month, just hit 2 good 10% trades. Right? If you're looking for 20% a month, just hit 3 to 4 good 5% trades, right? Break down your percentage goal on a monthly basis, and then break that down on a per trade basis. So you're not over trading. So you're not making good percentage and then continuing to trade over and over and over again, and then losing that percentage. And some of you guys, I see you guys in the group chats. You guys hit good trades, right? Some of you guys hit good trades, like nice 1 to 3s, nice 1 to 5s. Nice 1 to 10s even, right? But, by the next day, you've lost all of it. Or by the end of the week, you've already lost all the profit that you made on that great trade that you had. It's because you got to break down how much percentage you need per month, right? If you need 15 to 20% a month, then all you need is 3 to 4 good 5% trades, right? Even if you do 3%, right, and you're looking for 15% a month, right? All you need is 5 good 3% trades. So how come you hit 2, 3% trades this week and you still want to trade over and over again, right? You've already hit half of your goal already in 1 week. So why continue trading this week? Just cut it and come back next week, right? So, that's it for me, guys. One thing I do want to just emphasize for all you guys, and before I bring up the next guy, go to profitsociety.co. Everybody right now. Everybody right now. I need you to open a new tab right now. I need y'all to go somewhere and open a new tab, right? I need y'all to go somewhere and just go to profitsociety.co and just go ahead and join the wait list, right? Go ahead and join the wait list. You guys are going to be the beta members, right? You guys are going to get special early access to what we have going on with our new and improved system, our new community, guys. It's going to be the #1 community. I'm going to give you guys a sneak peek. Hopefully, Skaggs and Abel are mad at me. But just look at this, guys. It's going to be amazing, right? We're going to have lots of traders, lots of communities in one, right? Abel's already posting sauce. You know, I'm already hyping everybody up. This looks like Twitter in its first stages, right? Let's just be honest, right? Drop a 777 in the chat if you guys are excited. This is really like Twitter when it first got started, right? Skaggs is over here dropping sauce. We got, you know, signals, full send like the Nelk boys or nah. We've got Wealthy Visions Academy. You guys will have access to my brother Abel's Academy. We got the Hustle Academy. That's going to be my academy. You know, known for my name, Kyle Hussels. We got Skaggs Academy for Skaggs. We got the Power Circle for Ray. So this is really like going to be Twitter for traders in its early stages, right? I hope I'm not really like giving too much, but like, you know, I hope you guys are excited. And if you are excited, you know, I can't really show y'all more, but just look at the side panels. We got a lot of shit coming out. We got a lot of big shit coming out. So go ahead and go to profitsociety.co. Go ahead and join the waitlist ASAP. I need all 150 of you guys to join. And let's get it, guys. You know, I appreciate you guys for hopping on. My name is Kyle Hussels on Instagram and Kyle Hussels everywhere. You know, my brother Abel is really the GOAT for putting together this platform and putting together all this shit for us. So, you know, I need you guys to tap in. So with that being said, I'm going to pass it off to my brother Skaggs. A lot of you guys already know Skaggs. A lot of you guys, you know, have heard from him already. But if you don't know, this is actually one of my trading mentors as well. Abel and Skaggs are some of my biggest mentors. But Skaggs, I'm going to tell you guys, he's been trading for 7 to 8 plus years. I mean, he used to tell me to buy Bitcoin when Bitcoin was like 3,000, right? When Bitcoin was like $2,000, right? Before anybody was even talking about Bitcoin, he was one of the guys, like the pioneers of Bitcoin. Like, yo, this is coming for Bitcoin. You know, he was one of the pioneers. And I'm going to tell you guys, like, you know, he does have quite a share of Bitcoin. And, you know, with that being said, he's going to give you guys a lot of sauce. He's going to give you guys a lot of gems. And, you know, other than Bitcoin, guys, he's a great trader. You know, he's really a great trader. He trades the Wyckoff strategy. You know, he also is very knowledgeable about smart money. He has a lot of great connects in the trading space. I can tell you guys that for sure. You know, some of the biggest names like Q Banks, Sean Lee, like he's connected with these guys. So a lot of the people you guys look up to, a lot of you guys' favorite mentors, their mentor is Skaggs. They look up to Skaggs, right? So let's just keep that in mind, guys. We're listening to, you know, the mentor of all mentors. So, you know, let's keep that in mind, family. Let's pay attention. Let's not hop off. Let's take notes. And let's really zone in on what he has to say. So, you know, my brother Skaggs, go ahead and go crazy, bro. I'm done here.
All right. Yes, sir. Thank you, Kyle. Bro, let me get, if y'all can hear me, yo, let me get some threes in the chat for my boy Kyle. He just dropped some sauce on you guys. Let's go. Let me share my screen up with you guys. I'm not going to take up too much time tonight, family, to be quite honest with everybody. I know we've been on here for a while. I'm going to just give you guys the little bit of stuff that I really want to make sure you guys know for this week, that you guys really understand, and that I think will provide the most value for you. Again, I'm not going to, you know, talk your ears off, but let me just make sure I have the right screens up. Let me see. Okay, cool. All right, let me share this. And actually, real quick, family, I'm gonna just pull the stream up on my phone so I can see all of your wonderful comments without having to show you guys the stream you're already watching. So one sec, let me just pull myself up on the phone. All right, beautiful. So family, listen, Of course, I got the news up. I know Abel and Kyle already probably talked your ears off about this stuff, but I am going to ask you guys, right? What's the most important thing coming out tomorrow, right? And then I know you guys are going to try to say interest rates, right? But what's the most important thing around FOMC tomorrow that we need to pay attention to? I want to know who knows the actual most important thing, because tomorrow's release is, I won't say uncommon because it happens every other release, but I want to know if anybody actually has their sites on the most important aspect of tomorrow. And here's just a little tip. It's not the interest rate decision itself. All right, so let's see what we get in the chat here. So okay, so I see y'all giving me Abel's answer. So first off, shout out to you guys because you guys are obviously paying attention to Abel. So I love that right away. Somebody said bonds are important. Yes, but I would say bonds are important any day, the way again Abel showed you guys. A lot of you are saying speech. And you're probably not too far off, right? Abel was right in saying, the speech itself will contain a lot of additional information. But again, the speech in itself contains all sorts of information, right? So if you're one of the people that wrote the speech in the chat, I'm gonna ask you to go one step further and try to answer what important inside of the speech am I referencing, right? Because he's gonna talk about a lot. Powell gonna get up there. He gonna spit his game for a little bit. He gonna have some fun. He won't chat it up. He will answer some questions. But what's actually the thing that they're gonna talk about tomorrow that's the most important? Oh, I see. We do got some people in the chat that know. Right, because again, the speech is important, but he's gonna say a lot. And I'll be honest with you guys, a lot of what he's gonna say, we don't really care for. I'm gonna just be real with you. He likes to run his mouth. I like to run my mouth. I love to hear myself speak. Right, so does he. Let me see if anybody. So somebody says, are they still hawkish? If we still hawkish, so I mean, yeah, that's almost a given. No, we know they're not gonna switch to dovish. So, but that's not a bad answer. So shout out to y'all that said it. So shout out to Dominic. Dominic is the only person I see that wrote it, and that's the projections, family. That's the projections. So let's head over to the Fed's website, and let's just back out of this real quick. And if we take a look at their little calendar here, right, all the 2022 FOMC meetings, there's something you'll notice here on every other meeting, right? So you have the January meeting, which again is, has interest rate decisions, press conference, all that fun stuff. Then we got this March meeting, right, which has projection materials, right? And then we go through May, and then we go through June, and we get more projection materials. And then we get July, and then we come into September. And I know it doesn't say it here, but every other meeting is going to have projection materials, right? An actual pathway going forward. So we can come in and we can look at the projection materials again for June. And it's the same months every year, by the way. So it's always going to be, again, March, June, September, and December. All right, basically, again, every other release. But these projections, we all know what's happening tomorrow, right? We all know interest rates are going to rise. All right, there might be some speculation around how much they will rise. You have the people that are going to bet on them doing that, what we all expect, the 75 basis point hike. There are people that are delusional that might think that we're going to go to a 50 basis point hike, which means like a decrease in aggressiveness out of the Fed. And I say delusional because we know that's like there's like 2% chance that's going to be the reality. And then there's the people that speculate, again, like Abel was kind of talking about, where you might get actually like a whole, 100 basis point, 1% increase. I'm kind of in that little like rumor field. I don't think we'll get it this time. It would be nice to see. I would prefer to see that. I think the Fed should get more aggressive, especially off the last CPI data. But that data may not fully be, swaying their decisions. So it might take a little bit more for us to head there. Now, again, we all know this, right? We all know rates are going up to some degree, but what we really want to pay attention to is, did the path in the future change, right? Because the Fed has a general idea of where they, what their federal fund rate target is for 2023, what it's going to be in 2024. And this release is less about what's happening today And the question opens up is like, what is actually going to happen? So the first thing you can do is, right, you need to familiarize yourself with, well, first off, what is their current projection? Like, what really are they looking at? And all we need to do to get to this page, if you guys don't know how to get here, you guys can just, come to the economic projections on investing.com. You guys just click on the source here, Federal Reserve, and it'll open up this page that we're looking at. But we're going to go take a look at the June projection materials, right? We just HTML here. Sound issue. Sound is good for Abel. Okay, sound is good for Abel. It's good for everybody. So we can come in here. We could take a look at some of their projection materials here, and there's a few things they project. Right, they don't just project the federal funds rate, which is down at the bottom here, but they also have inflation projections, unemployment rates, GDP numbers, and so forth. Right, of what they expect. Now, again, depending on what your fundamental focus is, you might care about some of these things more than others. For me, I really only care about what they're expecting inflation to do and then how they're going to respond to that with federal funds rate. I know you guys on here talk a lot about the jobs numbers. I don't think those are important right now. Change in real GDP. Do these things matter? Do they influence stuff? Yes, but I like to keep it simple. I like to just look at the stuff that I know the Fed is most actively acting on, and that is getting this inflation down to their target. Now, if you don't know what their target is, again, here it is in their actual projected materials, right? So we know that the Fed typically, if you've been in tune with the fundamentals, you know they have an inflation target rate of about 2%. So if we come in here, they have, the median, central tendency, and then the range. We're just going to kind of focus on the range here. So again, for 2022, they are expecting core PCE inflation to be around 4.1 to 5%. Now, we know it's higher than that, right? So we already know that we're kind of above what they expect it to be on average. And we see that, they're trying to get it down to 2.5 to 3.5 for 2023. And ideally, they want to be back in that 2% range by 2024, right? And here is their federal funds rate plan to achieve that. So we could see, again, for 2022, they want to end up between 3.1 and 3.9. Well, that sounds pretty great because right now we're at what? Right now, 2.5. We're about to go to 3.25. So with this new rate hike, we're going to get right smack dab in the middle of their projected area, right? And even if we hike again, we'll still end up on, a little bit above the higher side of their projected. Now, again, their projection for 2023 is that we're somewhere between 2.9 and 4.4. Now, this is a little bit broader of a range. You could see this range is both lower and higher. That's going to be determined by how inflation reacts, right? Did inflation start to plateau out? Does it begin to decrease? We know based off the last CPI rating, we had, a little bit of an increase. So, we'll take this into account. This is what their current path is. And then we see for 2024 that they're expected to be between 2.1 and 4.1% federal fund rate. So again, the question is, when they come out tomorrow with the FOMC and the projection materials, what you want to do is aside from looking at the results, you want to come into these projection materials and you want to see, did something change, right? Did something change? Do they expect the federal funds rate in 2023 to still be between 2.9 and 4.4? If you come in here and you see that this now changes from 2.9 to 4.4 to something like 3.5 to 5.5 to 6, then you think now like, okay, cool. In order for us to get there, it's going to be likely the Fed has to do what? They're going to have to get more hawkish. They're going to have to get more aggressive on their interest rate hikes to achieve that. And then also, did their inflation targets change, right? Do they maybe, raise the targets up because inflation is still going so crazy, they don't think this is anywhere near still achievable? They probably don't change their target goal on inflation. They'll probably just change the federal funds rate, but there are circumstances where this does change. But again, looking for those changes, right? Seeing if this stuff stays the same or if it's going to call for them to get more aggressive. Now, for those of you that are unfamiliar, this is a little bit, to me, this is like modest, these interest rate decisions, these federal fund rates, because in order to combat inflation, right, when you have inflation up at, and again, this is dependent whether you're using core or just regular CPI, whether it's up at the 9% if it's regular, or if you're looking at core, then you're looking at something like, six and change, I think we're currently at. Whatever you're looking at there, in order to combat inflation, generally speaking, especially in like times where inflation is kind of running pretty rampant and a little bit of out of control, you kind of have to match the interest rate with the inflation percent. So if you have 8% inflation, it's wise to try to tackle that with, 6% interest rates, 7% interest rates, if you need to be aggressive on it, right? If it's continuing to rise, you want to almost kind of have an equilibrium between your federal funds rate and that inflation that you're trying to tackle and bring down. So that being in mind, if true inflation is somewhere between 6 and 7%, then we know that the federal funds rate is probably going to have to end up above 5% at some point. So again, that's the question, is like, for me, when this FOMC policy comes out tomorrow, it's not going to be me playing that 75 basis point hike. It's not going to be me playing supply and demand. Like, yeah, I'll be doing that in my intraday stuff. But what I'm really going to be doing is diving deep into this information, seeing if these projections change for 2023, 2024. And then that lets me know, okay, so if these numbers do go up, then we expect a longer bear market, right? Or not, maybe not even longer, but a more aggressive, right? We don't expect the volatility to go away. We still expect NASDAQ, crypto, stocks, even things like gold, and in some cases, maybe oil, if they don't change things on OPEC side with the supply, right? You'll still see this stuff kind of, coming down, falling, correcting nature, and that US dollar continuing to go strong. Now, if these remain the way they are, that's fine. That just means, path as normal, still expecting us through 2023 is basically that period where we'll expect the market to kind of, hopefully bottom out halfway through, and then we'll just continue on the same path. But this is really, when you guys are looking at the months in which you have economic projection releases, you should be looking at the projections and not the actual result, right? So again, for us, that's going to be now September, December, and then again, repeats next year, the same months, January, March, June, September, December. So hopefully that makes a little bit of sense to you guys. This is again critical tomorrow when you guys are listening to the speech. You don't even need the speech, honestly. Throw the speech away. The speech is like, that's just, there's nothing that they're gonna say in the speech that's not gonna come out in these documents anyway. It's just a matter of you knowing how to come in here and find the information for yourself, rather than having to wait for Powell to actually speak it out of his own mouth. In a way that might be a little bit easier to understand, rather than reading through, again, like an actual, data set like this. So any questions on that, family? Any questions on that? I know this might be a little bit new for people. Let me just go through the chat real quick here. Wow, I did not know they projected all those. Yeah, they absolutely project those, man. They absolutely, there's projections for everything. Remember, if the Fed's not doing them, the banks and the institutions are. Remember, they're trading off of rumors, they're trading off of data. They use leading data. So, they spend millions, if not even potentially billions, on, research and projections like these. So, yeah, this is from the Fed themselves, but there's obviously, institutional research as well. Sheesh, that's a cheat code. Yeah, Abel, listen, bro, it's every other month, man. Feels like economic class. Thanks for the free sauce. Yeah, no problem. These gems and free sauce family, we're truly blessed. Now I'm blessed. I'm blessed to have such good students that listen. I'm happy Abel really has a quality audience here that wants this type of next level information, be able to go out and get the information themselves and come to conclusions. Because again, this information will be presented to you on Bloomberg, right? This will be on Yahoo Finance. It will be written in articles, and usually it's 2 or 3 paragraphs below the headline, which is mostly what everybody reads anyway, which will just be the interest rate decision. But nonetheless, where do you find that again? So just to show you this one more time, you come to the economic calendar, and so you can go either under the FOMC economic projections. So you click on this, it'll open up a new page. It'll give you, this fancy page that again tells you, what it's about and stuff. And then if you come over here to the source, there'll be a clickable link. And this goes for all news releases, by the way. There'll always be a source. So whether it's for the Federal Reserve or whatever, you always be a source. So you just click on the source. It'll bring you directly to this page. This page is incredibly hard to find without just clicking on it through, like if you have to navigate their website, this page is a pain if I can never find it. So bookmark yourself this page. It'll remain there. It's just their little, Fed meeting calendar. And then you'll be able to come in, and this will get updated a few moments after the news release. It usually takes them a good like 3 to 7 minutes to get in gear and actually have it up on the website. So yeah, hopefully that explains how you can again come find this information. Any good YouTubers you recommend that help break these down as well? Aside from the channel you're watching and the Profit Society channel, not really. And I'll be real with you, that I'm sure there are people that do. I do not consume content from other traders. Even when Abel and Kyle speak, I know what they're doing anyway, because we trade very similar, but for the most part, I don't really care what other traders do. I just seek knowledge myself out of curiosity, and I get that from all sorts of sources. And then I just, I sift through everything and throw away the bullshit. It's the only way I know how to say that. So the free value provided here is better than most paid value. Yeah, I mean, I would agree, Abel. I don't see many people talk about economic projections. All right, cool. So I will do one chart for you guys. Again, I don't want to take up too much time here. I know it's almost 9 p.m. where I'm at, and I'm on the West Coast right now. So I know some of y'all guys a little late. I'm sure Abel got some stuff to do, and I don't want to hijack his session. So I'll do one chart. I'll take some recommendations in the chat. I'll pick the most common recommendation in there. If there's only one recommendation, then I'll take that, of course. But yeah, everybody, you guys got like a minute or two to drop some stuff. And let me get my charts ready, and we'll go over whatever you guys request from me. And try to be original. I mean, Abel and Kyle went over so many charts already. Like, don't tell me EU. Let's see what we get. We thirsty for the knowledge? Yeah, Oscar, I see you everywhere, bro. I mean, I love to see you guys everywhere. Of course, I say don't be unoriginal and say EU. Somebody said EU. I love it though. Let's see. We got gold, NAS 100, US 30, which is the same thing. CAD JPY, GJ, oil, NAS 100, oil. A lot of people want oil. I mean, ICT Queen. I mean, like just scroll back. I mean, like there's two different educators that both went over EU that trade the same way that I do. It would be a little tough for me to go over that. Shout out George, by the way, for the 20 Australian dollars. All right, huge thanks to you guys. Wealth and abundance to all who presented today. Hey, Abel, I'm gonna need my cut of that 20 Australian, by the way. Let's go throw that out there. Me and Kyle gonna need our little split of that. So it seems like a lot of you guys want oil and NASDAQ. I can't make mention of what I don't trade. Hey, that's fine. That's fair enough. No, I just don't want to repeat the same setup 4 times for the whole stream. So it seems like oil and NASDAQ. All right. So let me switch over my screen here. Y'all really like the oil. All right. So hold on, let's just confirm real quick. When I see it tick over. All right, cool. We're live with charts. So let's take a look at oil. So first off, we took a short on oil this morning, which you guys could see on my chart, which we hit TP on. This is where we told people to kind of partial out because we were kind of heading into FOMC. However, my more accurate exit was like down here. After it had bounced, it came down, it bounced, and I was like, all right, it's cool, get out of this. So we did take a little bit of a scalp on oil this morning. It actually was a beautiful setup. We took it right from here. We had no drawdown. Trade was done in like an hour. Beautiful trade, type of stuff you could expect from me out of the Profit Society live trading channels or live trading sessions when that does go live. But let's just take an overall broader look at this thing real quick. And for those of you that are new to the style that I do trade using something called Wyckoff logic, which is a more thorough version of smart money concepts. And I know the smart money concept ICT traders are going to hate me for saying that, but your original logic is based off of core Wyckoff logic. So I trade again, the more in detailed version of smart money concepts. That being said, it's all liquidity concepts. It's all low time frame execution, order block type executions, inducements, liquidity, all that fun stuff. So hold on, let me get my mouse real quick because I don't like to use my trackpad for charts. Let's just delete some of this stuff that we have on the intraday. Hopefully I don't need any of this tomorrow for the live trading session. All right. So oil right away, guys, right, has been a slow grind to the downside. And for those of you that have watched any sort of session that's on my channel specifically, my Skaggs Academy channel, I used to do, again, Sunday calls and some streams just like Abel was doing here. And for a while we talked about oil, and again, you guys can go back out for a while oil was all the way up in this area. We were kind of calling for it to come down to like what was essentially 85. Again, you can go back, you can even DM me. I'll give you the videos if you want the original analysis. But basically we were looking at oil kind of coming down to 85. And ever since we kind of hit what is essentially, these lower 80s, the question is like, what's next for this, right? Because we've kind of trading below all of this like daily liquidity. And, we haven't really done much since breaking this level. Yeah, we've moved lower. We've had some nice, swings kind of both ways, but really haven't done much. So the main thing for me that I've been looking at is the reaction ever since we kind of have filled this wick. All right, we filled out this wick. We grabbed all the liquidity below here. And for me, the way that I trade specifically, wick fills are very important. We always expect wicks to fill. Things like this, again, we always expect price to come down and retest them, especially when they're individual wicks. I'm sure a lot of people saw this after it moved up and were very bullish. So like, oh man, this liquidity grab is going to go forever. And that's just not the case. And it just slipped down. Can't say that I also wasn't one of those people. Again, in the moment that looks really good, but the wick ultimately does fill. So ever since we kind of filled this wick and erased the candle that brought us down there, right, which is this candle here, right, I've kind of just been a little bit sidelined on this, seeing if it wants to drag out and kind of like start a new cycle. Because the way that we trade is what we call a cause and effect analysis, right? So in order for us to move up, there has to be some sort of cause to induce that, right, which we call accumulation, right, that allows the market to move up. Just like in order for the market to move down, you need to have some case of distribution or a cause to give that effect, right? So this causes this causes that. So if you're gonna make a case for this doing anything in the macro, we need some sort of new trading range to build up a cause, right? So for me, now that we've filled this wick, my question is like, do we kind of get that where we now just kind of start a new trading range and then eventually resolve one way or the other, right? And that'll be gauged based off what happens. If I break this in a little bit of a lower time frame, there is some stuff, that you can kind of take a look at. Again, for the smart money concept traders, I know people are looking at, this area as an order block. My students would know why we don't trust this order block, and it's basically what it is. It's what we call an early cycle block. It is by all means, by definition, technically, yes, has characteristics of an order block. However, does that mean that it's going to always hold? No. And that's because it's at the beginning of a cycle. There's no real cause beforehand. All there is just a temporary increase in demand. And you can see, again, this is played into this, again, same area of demand, same area of support, same order block, right? Whatever terminology you want to use here with this wick. Now, what did I just tell you guys about wicks, right? Wicks typically do what, right? Wicks typically fill, right, is our logic. So again, the idea that we took shorts this morning was kind of also based off that. Like, okay, we have this wick, we have FOMC coming up, we expect some volatility. It's very obvious to me, again, that price was probably going to get magnetized again down here. Why? Because this wick is liquidity. This order block is not the type of order block that's necessarily created to hold. So for me, oil looks like a very easy, slow grind down into the support until FOMC is probably the trigger that liquidates the wick, right? So that's my main bias. Now the question is like, okay, cool. We have this bias, we have the area liquidity that we want to target, but how can I still get like in a position, right? How can I still actually actively maybe even execute on this to target this wick? Because I'm probably not interested in selling it right here. Again, with the news and stuff tomorrow, I'm strictly speaking really not looking to execute on this for any reason until after the news. I'll see if I can play some sort of, future supply and demand range after the news is out. I don't need to be in positions this, go to sleep, wake up for it to move nowhere, sit around all day till 2 o'clock just to, add volatility and possibly liquidate me or break me even. There's just no point in me doing that. That's not how I trade. It's not my style. But if I was looking for an opportunity to get into this, if I was going to look at this 4 hour, there's a few things I'm going to take note of. One is going to be the inefficiency or the imbalance or the clean traffic that's here. But more importantly for me, the stuff that still lives up here, right? Because I look at this little range here as just, again, a little bit of a liquidity buildup. For me, I usually mark that by like this, a little X, right? There's a little liquidity buildup. But it basically just means there's probably a bunch of people inside of here that are trading both sides of the market, right? So if you were in sells on this, right? Say you were playing this range and you were in sells, I mean, above from just putting your stop loss right here like a degenerate, most stop losses are probably living upside here. Likewise, people that are probably buying inside of this noise, for whatever reason they may be able to justify a buy, probably have a stop loss right below here, right? So we know that liquidity sits on both sides of the market here. And again, because we're in a bearish type of order flow, right, and we're looking at the downside, we have our reasons to break this level, come down again into some other inefficiencies. We'll keep trading in this direction until there's any reason to. I mean, just based off market structure, right, there's no reason to be looking, strictly speaking, for buys on this, right? There's no change of character. There's no real buying activity. Anything you're doing to the buy side is probably short term. So again, when we look at this 1 hour, this 4 hour, if I was going to get into the sells, I would love to see us come up, grab some of this inefficiency, grab some of the supply, and see if there's anything on the lower time frames in this area that I could play to manage my risk, right? Because just because I want to enter up here doesn't mean I'm specifically interested in taking something that looks like this. This is more risk than I would want to assume on oil, and I'd want to find a way to, tighten this up off a lower time frame. So I'm just going to drop my time frame again, see if there's any other POIs or interesting areas of candle structure for me to play. And when I look here again, this chart tells me more of just the same thing, right? The liquidity buildup above here. Again, another what I would consider a fake order block, another what I would consider a fake order block, or not fake. Fake's not the right word, but like a week would be the right word. They're not in the best locations. They're not structurally speaking sound. There's just not enough cause beforehand to validate this being a long-term kind of hold. So I'm still going to look for any reason to get in above this area. Like I know a lot of smart money traders are going to say, oh, well, you have an order block here. You're going to just take the 50% of it, right? And, that idea might work for you. Like if that does work for you, great. But that's not my ideal setup. My ideal setup is going to take this liquidity. I look at the 1 hour. I don't specifically see any candle inside of the area that I want to play above this liquidity. So besides the liquidity here, I don't really have anything I'd want to play. For those of you that have my course, you guys know this area is something that I would take a look at. But I'm going to still refine this down to a lower time frame. And again, see if there's something inside of here to play. And what I'm looking for really is something called a lone candle. And a lone candle, right, is the way that I define it is just like a single bullish or bearish candle in what I call in a sea of the opposite, right? So it's like if you have one bearish candle in a sea of bullish candles. Or if I go to the 1 hour here, the reason we kind of look at this candle is, again, this is, if you look at this, it's a single bullish candle in a sea of the opposite, right? And typically what I need is at least the 2 candles to the left of it to be bearish. So this is a bearish candle, this is a bearish candle, and then the 2 candles to the right of it also being bearish, right? It's all by itself. It has no support. It's the single one attempt of demand in that entire trend, right? It's the lone bullish candle. So I don't have anything like that on the 15 minutes. So I'm probably going to come back to this hour and I'm going to use this as my POI, right? So I'm looking for price to come just right above here, which is more in line with what my 4-hour stop loss was, which is fine because I'm refining this down. And I'm going to look to just maybe run a trade like this, and this would be my setup. Now, does this mean I'm going to put a limit order here? No, that's not the way I trade. I am going to trade like a lot like Abel does, where typically what I want to see is I want to see this come up here, give me some sort of reaction, usually ends up forming a new lower time frame order block. And then once that kind of mitigates out, then that's when I begin to trade. So it's like, yeah, this is my POI for oil. This is what I'm looking at. And I am still expecting it to, again, come down and clear out these lows. Now, the way I would manage this position, if I was entering somewhere up here or, maybe even a little deeper with this candle, in order for me to start exiting the trade, I would have to target the first liquidity pocket. So for me, that would be, again, below this wick, because again, we need this wick to fill, and above here. So as price kind of comes into this highlighted zone, I'm probably going to close 30% of my trade right away. That's like first TP, close 30% of my trade. Going to put my stop loss at break even at that point. And then we'll hold the remaining 70% of the position to see if we break below. Once we break below, I'll close out another 50% of my trade. Maybe creep down my stop a little bit in profit, and then just hold the rest as a potential swing. Because again, we're in tune with the overall kind of money flow. So that's just a little bit of how I look at the market, a little bit how I go through my process of looking at trades. Again, though, for me, this analysis that we're doing right now is not as important as what's happening on the charts when I'm ready to execute. So like right now at midnight Eastern Standard Time, I'm not really looking to get into a trade. So the analysis is all that I could do. But when it gets up here, I'm going to be monitoring, again, my lower time frame charts, my 5-minute charts, my 15-minute charts, and looking for actual live confirmation to enter the trade. So don't just set a limit like a degenerate. That's not how I trade. That's not how my zones work. That's not how I operate. So please don't treat my setups that way. And if you do, then, that's all on you. And I don't want to bask in your wins, and I don't want to bask in your losses either, because, again, that's not what I'm telling you to do. But yeah, does that make sense? Y'all go with that? Is that a nice little clear explanation of what I expect on oil? All right, let me get some threes in the chat if that made sense, if you guys are good with that. Like I said, I don't want to take up too much time. I give you guys a sauce of what to look for tomorrow and FOMC projections. Give you guys a little bit of sauce of how I would break down an oil trade. And yeah, that's that, family. Listen, I don't know if we are Abel, you here, bro? Unmute yourself for a second. Would I be able to hear you? Bro, we going live for FOMC tomorrow? Yeah. Do you guys want that? Let me get some fire in the chat if you guys want us to go live for FOMC tomorrow and break down the news live for you guys. I mean, I'm going to be live with my students anyway.
We are definitely going live tomorrow.
Okay.
For FOMC.
Hey, Abel telling me I got to show up.
So we will be probably, live around maybe 30 minutes before the actual release.
Yeah, 1:30. Yeah, 1:30.
And then we'll absolutely come on here and just, spit game with y'all and educate you guys throughout the whole process, give you guys our thoughts and opinions, on the release itself, how the market's reacting. And you never know, if there's an opportunity to get involved, shit, we might be able to even catch something. But yeah, for sure, I'm definitely with it tomorrow.
All right, cool. So I mean, you guys heard the man himself. He cool with it. We gonna be live again, probably at 1:30. Now, again, guys, if it's probably not gonna be on this channel, we're probably gonna be doing it on the Profit Society channel. So let me real quick, let me drop you guys the link for that, because if we do appreciate your support over here on Abel's channel. If you're not subbed over here, I don't know what you're doing. You need to hit that button right now, and the like button on the stream for that matter. But let me grab the actual Profit Society channel link. So
Yeah.
you guys can go over there. That's going to be our
So
combination, our effort, our joint effort together. And yeah,
it's
we
gonna
hope
be.
to see you guys there. That being said, family, listen, I'm going to pass it back to Abel to shut this thing down. I'll drop the link in the chat for you, my guy. I appreciate you having me and Kyle on here as always, man. Appreciate the love. And I'll see y'all tomorrow.
Let's get it. Let's get it. Let's get it. Family, family, family. Tell me what you guys thought about that. Right. Again, we had two really, really good traders that are extremely, extremely experienced. Really just provide you guys with massive, massive value. Right. So now it's just all about you guys going ahead and taking advantage of it. Right. Taking advantage of all this information. You know, one thing that I could really just recommend to every single one of you guys that's listening right now, do not just watch a training once. You have to understand the amount of gems and value that you'll be able to pick up by simply watching a training 2 times, 3 times, and taking notes on it every single time, right? That's how you become competent in the actual language, right? So definitely just go ahead and rewatch this, guys, and let's just continue getting better, right? But we will be live tomorrow, 1:30 p.m. Eastern Standard Time, right? So I look forward to seeing you guys all there. All right, Profit Society channel. The YouTube link is in the chat. And let's get it. Bye, family. I appreciate y'all. I love you guys. I'll talk to you guys later. Have a great rest of your guys' night.